Hello and welcome to the Arabic Hour. I'm Waleed Akar. My guest today is Dr. Atif Kubursi. Dr. Kubursi is Professor of Economics at McMaster University in Canada. He is also President of Econometric Research Limited. In 1982, he joined the UN Industrial Organization as Senior Development Officer. Since then, he worked as a team leader of several UN Industrial Development Organization missions in different parts of the world, including Saudi Arabia, Kuwait, Sudan, Egypt, and Thailand. In 2006, he was appointed Executive Secretary of the UN Economic and Social Commission for Western Asia, UN-ESCWA. He has published extensively in the areas of macroeconomics, economic development strategies, international trade, impact analysis, and regional planning, with special emphasis on the environment, tourism, and industrial development. He has frequently lectured on globalization issues, economic development, oil and industrialization, which is our topic today, impact of tourism on provincial and local economies, political economy of development, Arab affairs, and he has published 10 books in total and over 250 journal articles and technical reports. Welcome to the Arabic Hour, Dr. Kubursi.
Thank you, Waleed. This is too generous an introduction, but I appreciate it anyway. Thank you.
I would like to start our discussion today by highlighting some of the things that people usually say. The layman says usually on the oil exporting countries, specifically on the 6 countries of the GCC, the Cooperation Council of the Arab States of the Gulf. People say they have modernized the infrastructure. They have created employment not only for their own countries, but for neighboring countries in the Arab world, as well as Pakistan and many other countries. They have accumulated lots of reserves, trillions of dollars. They have been able to maintain low external debt through the years. And they also play the role of donors to the poor developing countries. They all have high per capita income. And if we look at the social and the economic indicators, other social indicators like, such as health and education, such as life expectancy, they have developed those areas in a certain way. Now, my first question is, because those are the topics I would like to ask you about. In the beginning, in your opinion, are oil reserves finite? It is estimated that the Arab Gulf countries have like 220 years of oil reserves for the local consumption. If they stop exporting, since now, they have 220 years of oil reserves that will be enough for their own consumption. Is mankind going to need all of that? Where do we stand concerning environmental problems? And you have written about this topic a lot. The environmental problems caused by excessive use of oil and gas, by burning fuel. And what about the substitutes for crude oil?
Yeah. Well, absolutely. Nobody can deny that oil has contributed in a very substantial way to the development of this group of countries. On the flip side, their whole development seems to depend on a non-renewable finite reserve. Even the 220 years, which is the ratio of reserves to actual production, is now in question. There is now almost unanimous agreement among scientists, particularly climate change scientists, that there is something called a carbon budget, and this is the maximum amount of oil and gas and fossil fuel that is consistent with life on this planet. To a great extent now, there is an existential question that if we continue to use this oil and this gas, are going to suffocate, are going to literally bring in global warming that would make life on this planet difficult and challenging. So the issue here is what's going to happen. The Carbon Tracker, which is a very respectable journal, has estimated that 50% of oil reserves should remain underground and a third of natural gas should remain underground if this planet will survive with a temperature of 2 degrees centigrade above the pre-industrial times. So the issue here is that there are grounds to believe that oil and gas are becoming stranded assets. A stranded asset is one that loses value or whose value is inconsistent with the survival of this planet.
If I might ask about some of what you have said, are you saying that the oil exporters did not use their revenues to support the process of development in general and to create substantial productive projects?
Absolutely. Honestly, one thing that is abundantly clear, that if you depend on a non-renewable resource that has a finite life, logic would tell you you should use the rent from oil to accumulate wealth that would be invested in renewable sources of income. I mean, most of these countries have failed to diversify the economy, to make evident, substantive moves towards weaning their economies from this heavy dependence on oil. On direct levels, about 40 to 50% of GDP comes from oil. About 90% of the budget depends on oil. Around an equivalent percentage of exports come from oil. These are not healthy indicators. And what they really mean, that the region has not made a transition towards a more diversified, a more sustainable, a source of income that would be renewable. What they have done is that even when they made movements towards moving off oil, they really made downstream movement or upstream movement, but they remain dependent, heavily dependent on oil. Downstream, you're going into petrochemicals. Upstream is when you develop machinery, equipment, and systems to exploit this oil. What was necessary is to move off oil. Because if you look, yes, we said the direct dependence of GDP of these countries on oil is 40%. But think of it this way. What about the banking system? What about the insurance? What about all other sectors? If you really move oil, the direct and indirect dependence on oil is around 60 to 70%, if not higher. So in many respects, all this situation where they show that there has been any movement, they do not, in a very credible way, augur for a more sustainable future. And consider this issue too. The story here is that oil is not all panacea, is not all a great asset in the following sense, that there were so many negative aspects to this oil. Surely they build, and you correctly mentioned, sovereign wealth funds that have even trillions of dollars that they were able to invest maybe abroad and other, and that was fantastic, and that's good. But this would tide them over a few years. Now there is this consensus that by 2040, which means we have 20 years at most, we have to make the move. Will this sovereign wealth funds be able to finance the transition to a more sustainable basis of income and employment? And here is the question. There isn't really much evidence that this would be the case. I mean, the carbon tracker says the 40 countries that produce oil are likely between now and 2040 to sustain a loss of $13 trillion. This is almost really 60%, if not 70%, of the US economy's GDP. Now, this is a substantial amount of loss. And the issue here, how and what is the share of this GCC countries, Gulf Cooperation countries, the 6 Arab Gulf countries in this loss? Probably a good part of it. Now, one thing we need to know is that these countries will make money even if the price of oil were to decline to $8. And the reason for this is the cost of production of oil in the region is exceptionally low. Some people put it about $20. I would be hard pressed to believe it is above $10, but which means that, yeah, at any price of oil above 10, they make profits. But because of that heavy dependence of their economy, the heavy contribution, the large share of oil in government revenues, there are people who calculated that any price below $85, most of these countries' budgets will show deficits. So to a great extent, the only way they can maintain the standard of living, a very high standard of living. I mean, many of these countries have so high per capita incomes. I have written in 1979 a book about the industrialization and economic development in the Gulf, and I suggested then, and this is like 40, 50 years ago, that these people are eating their capital, that oil cannot be thought of as production. If you could really characterize it correctly, the dependence on oil revenue is really dependence on monetizing, in really giving money value to their asset, and I call it capital. What they have done is they sustain a very high level of standard level of living at the expense of eating their capital.
Yeah, but don't you think that the money invested in the infrastructure, the huge modernization of the infrastructure that has been built in the Arab Gulf, the roads, the highways, the airports, the hospitals, the universities, and anyone who visits, will be impressed by the growth in the infrastructure. Don't you think it was, the money spent in the right way? Isn't that part of the investment that must have been done? Or, in other words, what can you tell us about the kind of investments that those countries should have taken instead of spending all the money on the infrastructure?
Yeah, that's an excellent question, Waleed. And you're absolutely right. They have developed an infrastructure, the like of which doesn't exist even in advanced economies. But there are problems. one major problem is they have divorced this infrastructure from linkage to production. That this infrastructure is superb in terms of beauty and comfort, but if it's not related to support production that could pay for its maintenance and for paying for its development, this becomes a burden on the economy. Today, maintenance of this infrastructure eats around a third of the budgets of these people. And this has to come from oil revenues. One would have thought, and one would have believed, that this infrastructure would be great to the extent that it supported an increase of production that would pay for it. It did not. And there is the other aspect, Waleed, which is really problematic. Quite a number of these infrastructures have not been studied, evaluated, studied in a way that would make it productive and rational. All right, I would even say to you that there are people who called it white elephants, in the sense that there are, like in the United Arab Emirates, international airports that are walking distance from one another. Yeah. I mean, would really Dubai, Sharjah, the Abu Dhabi, Ujman, you know, all these different Emirates, do they all need international airports that could fly the entire population of the UAE overnight? Now, there are duplication, there were some irrationalities. All right, why is it today that one of the major indicators of their success, and they brag about it, is how tall is the last tower we built? Burj Khalifa is now tallest. Qatar has to build another tower that is a bit taller. Tell me in what way, how, and in what manner are these towers contributing to sustained production in the future? I am a little bit worried that we have sunk trillions of dollars in the sand with really no substantive economic value, in the sense they did not increase the productive capacity of the economy.
I see. But, you know, still one can argue. It's something you just, you mentioned a while ago. You know, no matter how low oil prices are going to reach in the international market, but still, as you mentioned, the marginal cost or the extra cost of producing an extra barrel of crude oil is relatively low, independent of whether it is a bit above $10 or close to $20. Still, it is going to be much lower than the international price, which will always generate supernormal profits to those countries. How true is that?
Well, you know, no question that, you know, there are some very good reasons why this is. First of all, the government owns the oil wells, and therefore it would be able to extract oil in the most optimal way. Many countries don't have that property rights that give the government and the economy the chance to exploit its oil in the most efficient way. And second, it's really usually not very deep. In Alberta, to get one extra barrel of oil, you really have to dig in 1,000 meters into the Rockies. And the marginal cost is above $40 to get one extra barrel. In the desert in Saudi Arabia or in the UAE or even in Kuwait, you know, you have to dig 100 meters in the sand. But besides, you see, the oil in Alberta is landlocked. Oil in Saudi Arabia, Kuwait, UAE is next to the waterways, and therefore you could transport it at the cheapest possible way, whereas in Alberta you have to pump it, and now you have to go into pipelines, and some pipelines have become extremely controversial. The Biden administration, first thing they did, they killed XL pipeline, and then literally denied Canada a chance to take its oil to the Gulf, in Florida and Texas. The question is, and this is really very crucial here, is that you have to build also into the cost of production the damage to the planet and to the environment. And these are now being priced in. And that's why many have really come to the conclusion that we cannot, and it's a question not of economics only, but survival, to continue to extract and use fossil fuel that we know are damaging the planet and exacting a very heavy toll on the environment and on warding off. We're getting to the point where it's becoming irreversible damage, and therefore the idea has come now that oil has to remain in the ground if we want to survive on this planet. And this really means that there will be no value, because the damage it creates, it's going to be far higher than the revenues these people are getting. And that's why we have a very short period. And it's about time that our producers in the Gulf recognize very quickly and take action to prepare themselves for the eventual time where people would have gone to green energy. I mean, they say by 2030, 50% of the cars are going to be electric or hydrogen, and they're not going to be using fossil fuel. We are moving, whether we accept it or not, into a disruptive technology system that's going to make oil worthless.
Yeah. This brings me to say that I was reading about this issue, and some people think that oil reserves could be looked upon as a double-edged sword. It is true on one hand that you have the luxury of the higher revenues that provide all the means to develop and to grow, but it could also make those countries feel at ease. It reduces the urgency, and the challenge to achieve development.
Absolutely. And that is the most important one. And, there is a very good literature in economics about the Dutch disease. And now, if you really think about it, there is the Arab disease, which is probably even worse. The Dutch disease meant that, and it came in Holland after the Second World War. They discovered natural gas. Natural gas price went up very steeply, and Holland became a major importer instead of being an exporter, because the guilder, which is their local currency, became very expensive. Its exchange rate went up. Imports became cheap. The exports became expensive, and the economy literally lost its industrial prowess and was literally the breadbasket of Europe in agriculture. All of a sudden, Holland was literally living off the oil rent. This situation became the same in the Gulf, in the sense that there isn't a single local currency, whether it is the Saudi riyal or the Kuwaiti dinar or the dirham in the UAE. They all became extremely highly appreciated and militated, and became a disincentive for anybody to buy anything from them, because their currency was so expensive that exports were priced out. But this is not only the thing, and you alluded to something very fundamental, and I consider it to be a major issue, and that is literally the sense of dependency and the sense of relying on oil as a crutch. You know, that you do not have the incentive to be creative. You don't have the incentive to be productive, because oil that goes from the oil well into the oil tanker without the intervention of any person, all of a sudden now you have this huge rent and you can finance anything you want to buy without really any effort. One of the major catastrophic results of the oil economy, and what I call the oil curse, resource curse, is severed the relationship between effort and income, between production and consumption. It created a system of values that completely corrupted the necessities of an advanced economy. You get income in the oil-producing states by being closer and to the being in the crony relationship to the emir, to the prince, to the leader. It's no longer your education, it's no longer your ingenuity, it's no longer your productivity, it's no longer your efforts, but how near you are to the government. And created something even worse called the authoritarian bargain. This is really very damaging and could really be a major impediment towards development, in the sense that the government has gone and bought the acquiescence and acceptance of its citizens in exchange for material benefits they give them. You give me your voice, I give you cheap electricity. You give me your acceptance, I will give you free education and free health. This is extremely dangerous because in many respects it militated, it undermined the transition to a democratic society. When the government gets a source of income and sustenance independent of the governed, it perverts the relationship between the ruler and ruled. You see, in any democracy, the ruler is held accountable to the ruled because the ruled are the people paying for the ruler. The trouble in most of these oil countries is that the government gets its income independent of the citizens. The citizens have no right and have no power to hold accountable, and waste has become a defining characteristic, and the fact that these countries, with the exception of Kuwait, have made very little transition toward a democratic system.
Yeah, I see. Could I ask you please to elaborate a little bit more? I mean, on this topic, how do you see the future of those countries that are highly dependent on oil and gas for, you know, their revenues, and in the sense that if you were to give some advice, what could be done, let's say in the near future, let's say in the coming 10 years, what could be done to overcome those problems?
Yeah, this is the million-dollar question. Waleed, absolutely fantastic one. I don't see a very bright future. I don't see a quick calamitous or a big crisis, and that's maybe a problem because, as we said, the price of oil could go way down and they still make profit. They have that sovereign wealth funds where they have accumulated reserves. They will tide them over a few years, but the writing is on the wall. You have to restructure the economy. You have to move from a rentier economy, depending on the rent from oil, to a more productive, sustainable economy. And that sustainable economy, productive economy, is industry. Maybe there is no chance of agriculture, but it's also ingenuity of the people. Knowledge today is one of the major sources of income. You really want to educate your people so much so they have the skills, have the abilities to be creative, to bring the technological transformation. And you need to build alternative sources of financing government. There were no taxes. Now they're beginning to have taxes. There is a value-added tax. They're raising it to levels that are commensurate with what they need. But there is still a gap, a large gap, where these governments have not created alternative sources to oil to finance. And you have to develop different sets of exports. These countries import, they have the dubious distinction, the citizens in these 6 countries have the dubious distinction of having the highest per capita imports in the world. One Saudi imports the equivalent of 100 people in the rest of the world. You need to create the capacity to produce, but also ability to export something other than oil when oil goes, so they can afford to finance and sustain the high level of imports that you have become accustomed to. There is really some major challenges, and we don't have much time. And these economies have to come to terms with the challenges they're going to face. I've seen now some movements in the Gulf, particularly in Kuwait. They're really trying to create, and God gave them abundant sunshine, solar energy. They are really trying as much as possible to create hatcheries of shrimp, other things. They are trying to build these alternatives, but this is a moment where it's not trying, it's where doing. The challenge here is we have very short period of time. We have a very small window open for them to do the right thing. They better do it. If they don't, the consequences are extremely dire.
Yeah. In the business of telecommunication, the software business, at one point of time, United Arab Emirates dedicated a whole lot of money to invest in this business. But for some reason, or many different reasons, it did not seem to be feasible. It stopped at some point of time. Do you think that this might be one area, where those countries can invest their money for the coming future?
Yes, absolutely. I mean, look, the globalized economy of today, or the knowledge-based economy of today, has moved from hardware to software. So definitely investing in mastering the technology and to participate fully and totally in blockchains, artificial intelligence, fine tech, all these things are not buzzwords. They are code words for what is likely to be successful in the future. And, in the absence of agriculture or other types of industrial products that they could make, these are incredible alternatives that seem to give a glimpse or a glimmer of hope that these people can. Now, the issue, and that's another thing that one has to take into account, to a great extent, the development model in the Gulf was also to depend on expatriate labor. Now, the issue is to what extent, in the absence of the oil revenue, that expatriate labor that had become the hallmark of that region would remain in the region and would find it comfortable and profitable to remain. You cannot escape the most relevant alternative here is to create domestic capacity. And this is really where I believe, educating the local people, providing them with the best university education, technical education, and skilling them and giving them with a role, all the requirements, like where are the incubators, where are the accelerators, where are the institutional mechanisms and the incentive schemes and the real good universities. I mean, at the moment, they're bringing really the best universities to open what I would call literally grocery stores, the kakin. You really have to get the best education. And if it doesn't come from home, then send them abroad. But what you really need in that short period of time that we really have is to have the most educated, skilled labor that can lead the future development of the transition from the mechanical economy into the digital economy, from the resource economy into the knowledge-based economy, from dependence on others to self-reliance. These are the crucial issues.
Yeah, yeah. If we are residents of the countries of the Levant, the impression that we have is that if you say the Gulf, the oil exporters of the Gulf area, those are rich people. Can you tell us a little bit about the equality or inequality in income distribution inside, among the local people, among the people, of those countries?
Yeah, you see, I have argued in the past and continue to believe this to be an excellent opportunity and alternative for the people of the Gulf and in the sovereign wealth funds. Instead of going all over the world, investing everywhere, there is a great investment opportunities that will have repercussions on. If they were to improve agriculture in Syria and Iraq, if they were to improve the services and the ingenuity of the Lebanese, if they were to empower the Palestinians and things, the rewards to economic cooperation among brothers is one of the best alternatives. If you cannot develop these in your own milieu because of some natural, you have an opportunity and a great rewards that could come from integrating these economies and empowering one another and creating the coordination. Today, unfortunately, they are, in my view, gambling on the wrong horse. They're going for normalization with Israel, as if Israel is going to really invest and improve it. Nobody is going to really have your interests like your traditional brothers and sisters and the common culture that you have that binds you together, that historically got you where you are. Without, Lebanese and Syrians, Jordanians, Egyptians, things, the Gulf would have never. But this is maybe a time to reevaluate and to see to what extent, instead of bringing these people, I can invest in the other places, take advantage of all these capacities, and make sure that we will grow together, develop together, share in a more equitable and a more reasonable way to grow together.
One last thing, if you allow me. Another thing we often talk about in this part of the world, the Fertile Crescent, is all the job opportunities that the Gulf has offered through the years to the people of this area. And in one way, as I was listening to one of your lectures, you said there's the highly dependent countries on oil and gas, and the less dependent because of the employment opportunities. Yeah. So the damage could also be, in the future, could also be affecting the neighboring countries because of the employment issue. I mean, for instance, in Lebanon, I'm not sure about the numbers. We don't have exact statistics on that, but probably something like 700,000 people work in the Gulf from Lebanon in those 6 countries. Could you please elaborate a little bit about this?
Yeah, again, a very relevant and important question. There is a joke that in the Arab world, we don't have just oil exporting countries and non-oil countries. What we have is oil exporting countries and non-oil, oil-dependent countries. Because these countries, even that they think they are immune and not dependent on oil, their workers are working in the Gulf. The Gulf has been and was always generous in terms of aid to their brothers in different countries of the Arab world. There is also trade, quite a bit of the products from Jordan or Lebanon or Syria or Iraq are circulated in the area. There is a very strong probability here that we can develop the system of water sharing that has not been explored or used as much as the potential is there. There is no question that if the Gulf countries were to succumb and were to be thwarted in their development and ability to generate income and wealth, the region as a whole, the whole Arab world, is likely to be affected. There is a commonality here of a destiny that should really be taken very seriously, because when the Gulf limps, we will be really paralyzed. In a sense, we need a joint and cooperative strategy that would make sure that we all are in it together, and not only because this is a planet we share and we don't want to spoil, but also there are lots of rewards to economic cooperation and to coordination and to working together.
Dr. Kubursi, thank you very much for your presence, and hope we get the chance to invite you again on different topics, economic topics, in the near future. Thank you so much.
Oh, thank you. Excellent questions. Enjoyed the discussion, and I'm more than happy to come again.
Thank you so much. Thank you.